from where you sit. So balancing books of accounts is never an easy affair if you ask any banker in the world. Well, today we shall be camping at KCB headquarters here in Nairobi, Kencom to be precise, and we'll be hosting Joshua Oigara, the Group CEO of KCB, and he'll be talking to us at length about intrigues in the financial system as well as where the bank is headed in the face of the rate cap. But really, who is Joshua Oigara? Let's take a look at his profile.
Joshua Oigara, CBS, is a member of the KCB Group PLC and KCB Bank Kenya boards, as well as the KCB Group Chief Executive Officer and Managing Director. He is the chairman of the Energy and Regulatory Commission of Kenya, a director of the Vision 2030 Delivery Board, and he was commended by His Excellency President Uhuru Kenyatta on the award of Chief of the Order of the Burning Spear, CBS, for exemplary service to the people and nation of Kenya. He is also the chairman, Kenya Bankers Association, the banking industry lobby. Listed as one of Africa's top 25 leaders to watch based on his role to champion transformational leadership and change on the continent by the Financial Times, Joshua actively engages at national and industry levels to drive this agenda. Joshua was named among the top 100 youngest and most influential economic leaders in Africa. He was recently named CEO of the Year in East Africa by The Banker Africa and captains the largest indigenous bank in the East African region with assets of over $6.5 billion and a market capitalization of over $1.4 billion.
Thank you so much for joining us, Joshua.
You're welcome.
Such a pleasure to have you on the program. Oh yes, KCB it is. Been there for close to over 40 years now.
Correct.
And the bank keeps growing in leaps and bounds. How is it that KCB has been able to sustain the stellar performance? Looking at the numbers, you recorded a 19.6% profit in profits for the 9 months ending September 2018.
Correct. I mean, I would say two things. Largely, we are very interconnected with the economy. So you have to look at the markets that we operate. So generally, Kenya has been, this last year, Kenya economy will grow mostly at 6%. Yeah. The latest figures will come in the end of February. If you look at the regions where we operate, you know, whether it's in Rwanda, so the entire East Africa region, including South Sudan, they are largely growing at 6-7%. And there's a lot of vibrancy in the activities that we see. So part of our growth is because we are very much connected with economic activities for wholesale business, for retail business, for consumer lending, a lot of innovation we are doing on the Fintech part of our business, and you can see a lot of partnership between us and Safaricom and other players. So I would say we've been seeing that element growing. And as the economy grows, Kenya's economy is now estimated to be more than $85 billion. So and that's almost 2 times from which it was 5-6 years ago. So there is a lot of work that has been happening. And we've also been able to have huge growth in terms of our customer numbers in the last 2 to 3 years since we went to the Fintech area to build our business. And we will continue to grow as long as the economic environment remains vibrant, strong. And also there's a big initiative now on the Big Four, whether it is investing in food security or in housing, or we're going to manufacturing, which are sectors we lend to, or making sure that we are integrating our bank to support the universal healthcare. And by the way, these initiatives are similar across the region. So Kenya business has been a forefront for our business, but we are seeing more work in Uganda. Our international businesses should contribute in the coming year up to 20% of the growth in our business.
All right. And Joshua, as much as the bank has been profitable, we are living in a very volatile time for the financial sector.
Correct.
Where there's been a lot of turmoil when you look at interest rates.
Correct.
And till to date, some say the rate cap was a good thing. Banks are more disciplined. Others are arguing that it was counterproductive to the gains we had made as a country. Correct. I don't know, where do you sit in this narrative?
I mean, for us, we have always said that rates, even as an industry, we have always said that the banking sector doesn't support high interest rates. And obviously, many people do not believe that. But what we must demonstrate as industry or as a largest bank is that we understand the customer where he is at, what is the risk profile the customer has. And if, Abi, you are a great customer and your repayment ability today is showing that you are top of the range, you should get a price that is equivalent. So today we put you in a basket, a universal basket, and then we price one particular rate for every individual. The last 3 years have been very difficult for the industry. The rate cap isn't the right solution for fixing the high interest rates. It has never been, and it will not be a solution. But there are lessons. I mean, there are customers who are excited about the low rates. Our small and micro customers have suffered a lot. Credit to SMEs has completely dried out. So what we're thinking now is about innovations to find solutions using data points, using algorithms, using the fintech capabilities that we have, and partnership with people like Safaricom and M-Pesa.
Yeah.
So there's been a change in the business. I would say the business model for the banks has been largely challenged. And banking as we knew it, the last 3 years has been the most difficult. Yet, we've done 3 things. We've been able to invest very wisely with technology and footprint to be able to put in investment on fintech. So we're lending on the mobile, we're saving debt on the mobile, and that is one basis where we're getting fees and commissions.
All right.
We're also increasing our number of customers. So our customers now have reached today share of 18 million customers. So they were not there before 3 years ago. And lastly, we've been much more contributing our businesses from the regional countries where we are. So we still have to do more to be able to deal with the cancer of high interest rates. And that's, for me, I see that it's one of the biggest concerns industry. Nobody should be borrowing at 20% today.
But Joshua, if you would agree with me,
Correct.
As much as you're saying there are pockets of your consumers
Correct.
that enjoyed the rate cap, did we see a spike in lending to that niche market, or it was just negligible?
Largely, I would say that the interest rate cap has cut off credit. So if you ask an ordinary person who is, selling vegetables, or who is a trader for let's assume even you just go here to Ngong Market or Ngong Road and they're selling furniture, they don't have credit. So the solution hasn't. So if you ask me, are the people benefited? Largely, I would say no. Credit is now growing below 3% or 4%.
All right. So Joshua, if I'm getting you clearly, as much as we've seen credit uptake going down,
Correct.
What options have there been in the market? Because
Correct.
as much as people cannot borrow from mainstream banks,
Correct.
what does it do to an economy like Kenya, where we have a high appetite for credit?
Absolutely. And largely the economy has been powered on the basis of lending to private sector. It is the energy and activity by the footprint of small businesses that shape the destiny of our economy. So there is no two way about it. You need credit to be able to build enterprise, create the opportunities, and that is what leads to GDP expansion. Okay. But what has happened is that they have then been pushed into unlicensed or unregulated. So largely we kind of call them Sherlock. That's where people are borrowing from today. And to be honest, there is completely no funds available.
But is it risky for us to go that route?
I've always said before that we have to deal with the causal factors for why the rates are high. Correct? For instance, now the government is borrowing at a very high rate. And so banks find it easy to put money into government paper, right?
Correct.
So it's easier to lend to government at 9-10% than lending to somebody else who then you lend them at 13% and they don't pay. Your NPL is 5%.
Yeah.
So, but we have to find a win-win. And I believe, so there's a bigger conversation here, Abi, beyond just credit. Remember, it's a same business is creating jobs for our younger people. I mean, how many young people do we have without jobs today?
40%.
Averagely, 5 million. So, and they're not gonna be many businesses the size of KCB today, but there will be thousands of businesses which are micro enterprises that create the 4 or 5 jobs. So if you create 1 million enterprises and they need access to credit, to buy goods, to do their chattels, to do their business, that is what will build the economy. We always say that up to 80% of our economy is driven by small enterprises, micro enterprises. And we are thinking about innovations today that will unlock credit for them between this first quarter of 2019.
Interesting, Joshua. And you're a man who regularly interacts with numbers. I don't know, how significant has the rate cap dented your books?
So when I look at overall, I mean, as an industry, so we lost 500 basis points of income. And for a bank like us, which in terms of lending, overall loans are shy of 400 billion, that will cost us 10 billion, correct? In a period of, and that's 6 months. So you have a risk of losing almost 18 billion in a year. That's a huge amount of money, correct? You remember the bank makes 30 billion in a year. And therefore, what we have done is to have interventions So we've looked at how do we expand lending. So we've been lending. KCB has been we haven't stopped lending to customers. For individuals on the mobile side today, you'll be surprised. We lend 300, 400 million per day on the mobile platform on KCB M-Pesa that we have with Safaricom.
That's significant still.
Absolutely. I mean, we are the single largest lender today to micro enterprises. We don't talk about it that much sometimes, but we see the benefit. We are lending 10 billion a month, and that's 100 billion in a year. If you look at it, more than 100 billion a year. And I would say that what it has done, so banks have responded differently. Maybe larger banks at a bigger base, medium banks and smaller banks have responded very differently. One thing I will always say that we need to deal with the rate cap issue and find the underlying concern for why rates are high. And we said three things. So government is a big competitor for private sector credit. They are borrowing at higher rates.
Sure.
How do we deal with that issue? So there's an issue about fiscal consolidations and issues that naturally the National Treasury is dealing with.
Austerity measures.
Exactly. And then for us, there's also the chance of expanding the tax collection network, isn't it? So there is and that will be an area that you have to build in the short to medium term. And then from the banking point of view is around consolidating the industry. I've been a big proponent about let's bring together banks that are stronger enough and are able to operate in a manner that is more efficient. As you bring in down the cost, that benefit should go to the end customers. And finally, we have to share information that customers give us, like the credit information reference bureaus, not to deny credit. We have to use that information also for positively scoring the client. You see, what happens today is we have one price, except now lending to the mobile. We have one price.
Yeah.
But if Abi is a good customer, give him the benefit. Correct? So that's what you have.
Don't lock them out.
Yeah, what you call the risk-based pricing model for all customers in the market, like it happens in other parts of the world.
All right.
Those four initiatives, if we run them, and obviously you must deal also with the issue of delayed payments. A lot of our customers go in, they do their business, you're given a contract, you've done like a small study, you've done a small road, you borrowed your money, and naturally time comes and you're not being paid. So these overdue payments, whether it's for national governments or county governments or private sector, increase the non-performing loans in the industry. And that also goes into the cost of credit. So if those issues, and we've discussed them very much in the National Treasury, we believe that you can unlock the potential for credit for our economy.
Interesting. And Joshua, many a times you're in the company of the president when it comes to national issues. And the president is very particular about the big four.
Correct.
And it speaks to what you've just raised, how much we are losing in the economy in terms of credit that would have been lent to youth groups.
Correct.
And of course, as KCB, you are running a very powerful initiative to Jiajiri.
Correct.
And looking at the bigger picture, is it time that the government just put its feet on the ground and says, let's repeal this thing?
I mean, if you think about the bigger challenges that the country has, and we have very much support. I mean, I get a chance to sit on the Vision 2030 board, and I also do chair the Energy Regulatory Commission. So you see what I call the enablers for transformation for our economy. The four initiatives are very strong. I would say that you couldn't get any better assessment of what the country needs to do. So whether you're doing infrastructure, you're going to housing, whether you're doing food security, is a bigger challenge for our nation. What we need to do is to find everybody to kind of recreate the way you invest resource. And I think I'm excited that the president just recently, earlier yesterday, announced a different kind of structure to help coordinate national development. So that's a different kind of where you put resources, because we lose a lot of money. Whether it's unethical conduct, whether it's corruption, there's a way you lose funds, and that's funds which you don't have to invest. So I would say from our point of view, it's not just the repeal of the law. It's also about making sure that we have enough initiatives around the big four, like housing. So how do we make sure that 30% of the work being done in a housing project, like the one they are doing here in Oigara, is for local entrepreneurs?
Sure.
We call it local content. I mean, unless there's no value for creating big projects for which not a single Kenyan enterprise can participate in, that doesn't add value to the economy, correct? It doesn't build capacity for those enterprises, does not create the jobs, and that money doesn't recycle, what you call the multiplier effect, doesn't come in the economy. So what we believe, there's always what you call the concern about who comes first. Yeah. People always say the businesses are not competent, they are not able. But unless you give them a job, they will never build capacity. And through to Jiajiri, for instance, we are building those enterprises. Sure. We are putting behind 10 billion every year to basically give them skills, upskill them, and they are in all sectors. And you'll be amazed when I looked at some of the businesses, people that had no confidence today. So we build enterprise for them. And Sujajiri is a fantastic flagship project. If you are taking someone who wants to build a business, so you can say, I want to be a mechanical engineer. I want to be an automobile engineer. We take you to school, we put you the funds, set up the business for you, and then supply a contract. So if you are going to build a house and we are lending you as a bank, we tell you 30%, give to these guys. They hire 4 or 5 people. So far we have 22,000 of those individuals, of which 7,000 of them have created businesses. Now if they hire 3 or 4 people, 30,000, 40,000 jobs have
Does that
been
trickle
created.
down?
That's how you build. You see, GDP is not this thing that you hear. And I always ask, every time I go to Gikomba, I ask the guys, do you feel the GDP with
Do you go
yourself?
to Gikomba?
I go to see the market.
Okay.
I go to see the market. If you go into Kondele,
Yeah.
you see in Kisumu, you say, what is happening with these individuals? Then if they don't feel the fabric of currency in their pockets, you cannot say that we are building, I call it shared prosperity for the economy of Kenya. So I fully support on that. And Sujajiri is one program. There was another one called Agina, which maybe you also heard about, that is running from the technology side.
Correct.
Under CS Musheru in ICT. Now, what we need is to build a profile for a Kenya-centric model for building opportunities for our younger people. We are very fragmented. I mean, we have no problem expanding to Jajiri with the entire industry. Whoever wants to come in, and in fact, our biggest partners are global partners. Correct?
Yeah.
So we are working with partners today from the United States. We are working with the GIZ, for instance. We are working with DFID. We can work with local corporates today to build one firm conviction about our business in Kenya.
Interesting. Quite a lot you're doing, I would agree, Joshua. And looking at the bigger picture, as we try to push the economy towards being more knowledge-based,
Correct.
we've seen banks also tilt their models. Gone are the days where in a board meeting,
Correct.
you'd miss to have the ICT director.
Correct.
Nowadays, the ICT unit has a big role in any serious bank in
Correct.
Africa.
Correct.
I don't know, what is the case at KCB now that you're seeing a huge focus on mobile lending?
I mean, so let me say that mobile itself is maybe one part that has seen dramatic acceleration from how business has moved. But banks have been disrupted many years. And when M-Pesa showed up, we were among the first banks to say we don't support M-Pesa.
I remember.
You know, but
Bitange Demo was then
Correct.
the PS.
Correct.
And he said, let's innovate, then regulate.
Exactly.
Yeah.
Exactly. And that's why I would say today that we, as KCB, we are a case of a fantastic comeback. Today, we are one of the largest partners of creating innovative mobile products with M-Pesa today. So if you look at KCB M-Pesa, for instance, we have more than 10 million customers in that platform. And you know, those products provide dignity, respect, access, and democratizes credit. I mean, if you're a Mama Mboga today and you want to buy some milk and you're somewhere in Wakulima Market or just here in Kiambu, you just go into your mobile device, you have your limit, you borrow, you settle, and you move. And repayment is 98%. Now, we are collecting much more data than just credit. We also allow you to make the transfer money to M-Pesa, and that transfer is zero rated. You don't charge any fees.
Sure.
And that is how you enable economic activity. Now, the disruption will go beyond payments. We are now able to make payments for school fees. You know, Lipa Caro, for instance, is something we've been investing in very strongly. How do you go to pay into merchants? So how do you pay transport? We were very innovating on how do you make sure that you can digitize the transport sector. Obviously, we were not very successful. But the vision today for the bank of the future, or today, is about failing fast forward. In the past, we were very afraid of making mistakes. Today, we allow our people to try, unless you can try something new, especially with technology. We are competing with very agile, businesses that today run around the clock. The fintechs today, we have lenders who are lending from Silicon Valley in our market.
Wow.
People like Branch, people like Tyler are lending today, not best here. And that's what I would say, that you will continue to see. So we favor a model of partnership.
Yeah.
So let's co-create. And that's how we see it. I mean, for too long, all of us as banks have always wanted to fight and say, let's become something. Let's become an M-Pesa. That journey has already been moved ahead by Safaricom.
Yeah.
What we need to do is how can you plug in, maybe add health data, so we can provide treatment for people who are unwell, add music data in that information, add something else for education sector, bring in content. So you have to expand the platform into a full ecosystem which is networked. That's what KCB is doing. And I can assure you, 50% of our revenue in the next 2 to 3 years will come in fully from the mobile side of business.
Does this mean we'll see branchless banking one day?
But we're not very far today, if you ask me in that perspective. So I'll give you some kind of numbers that helps.
Yeah.
So up to 85% of our transactions are already happening outside the branch. So in a way, we are seeing that happening already. The branches we had before, now it's largely relationship centers that we are seeing for small enterprises. So like Tujajiru now uses the branches for building enterprise. Our mortgage customers will go in there and do some of the transactions. What you are not seeing is more branches, correct? So we are naturally seeing a reduction systematically and very intentionally. So in another few years, obviously it has an impact on jobs. It also tells you that the branch jobs are disappearing.
That's true.
So which means the skills we need are much more the digital, the fintech, the designer jobs, the engineering jobs, correct?
Yeah.
The coding jobs. Those are what the jobs are happening. So if you can reskill,
Yeah.
the better. But I can guarantee you that even in our market, we are going to see a debranching
Okay.
for the financial institutions.
I look forward to that.
Absolutely.
And Joshua, I mean, the time is far much spent, and we just have to wrap up now. And I cannot end this interview without talking about consolidation of the banking industry.
Correct.
And recently we've seen an application for a merger, that is NIC Bank and CBA Bank. And pundits are placing this as one of the largest corporate mergers we might witness in the banking industry. I don't know how true this is, but KCB midwifed the resuscitation of Imperial Bank.
Correct.
And it came to show how resilient the banking sector is.
Correct.
And it also speaks to the aspects around the industry is not suffering a systemic issue.
Correct.
It's more of an isolated case. Perhaps as you captain the banking industry into the next frontier, I don't know, what is your feeling around consolidation?
Correct. It's a very good question you raised. I mean, let me say that from where we sit as KCB, the role is to be a catalyst for creating local solutions to strengthen the financial sector. You see, for many times as a country, we never appreciate the things that we do to strengthen our own economy. We always naysayers. You know, there's a lot of people always saying this cannot work. I mean, I remember how many times people said this will frustrate KCB, this will dent KCB. It's like a black point in a white shirt, right?
Inheriting someone else's burden.
Ultimately, you're going to create solutions for your problems. You know, nation building, and how I'm speaking about beyond just the bank, no country has been built by another person than the citizens of that nation. Kenya's economic future today cannot happen without the citizens participating in its own development. There is no external person who can do it.
Yeah.
So if there is one message we need for not just our customers, but generally the citizens, is to say, where do I plug in the economy and support its growth for the next generation? That is the mantra for nation building. But if you're looking for an external person to come, that person doesn't exist. Not China, not France, nobody else, not South Africa, nobody will do it. And this is why I love a country like Rwanda. You see exactly how everybody is fighting every day to build. You walking into Kigali today, you believe you're probably in another city in Europe or even in Asia. Yeah. But consolidation is a great way because we believe that this, looking forward, the conversation between CBA and NIC, I mean, it's truly something that should be applauded in the industry. It's maybe the largest deal today, but I do not think it will be the largest. Okay. I am sure that in the next year or this year, you will see transactions. So we support. Yeah. And it's not about losing value. There's something we look in Kenya, we talk about what is the average banking per capita per bank. So we have 47 million Kenyans, or 45, 47.
In fact, the census is coming up.
So, and we have 47 banks. So it's a bank per million.
Oh, yeah.
There's nowhere in the world where this happens. We are naturally inefficient. So if you think about China, India, which have far more population, it's a bank to 10 million.
But some say the more the merrier.
Not necessarily today. This is an issue that's always applied for the banks. Okay. But we could have had more people in the telecom sector. Why do we have only 3 operators?
That's true.
Why do we only have 2 guys doing soft drinks, for instance? Why? Banking is not unique. It's just trying. So we support ourselves, and we will see. So this is why we went and said 2 reasons actually why we took into Imperial Bank. First, we believe that a stronger financial sector is good for Kenya, because if it doesn't, then we can't operate. I mean, if you have a failed financial sector, the ecosystem of the economy will not work. So this is one area. So we are fighting very boldly about a stronger economy and a stronger financial sector. Two, we understood how we can there's also belief about helping the customers of Imperial Bank. Ultimately, they are Kenyans like you and I. They were depositors like you and I. So if you find solutions for themselves, I think we're finding solutions for our business. And we have an income we can make in that transactions. And lastly, is about slowly pushing the consolidation conversations in our market. So we've seen Imperial Bank. We're now also seeing, there was already the Chase Bank, which was bought by SBM.
Sure.
We're seeing the CBA. There was the DTB and Habib Bank.
Yeah.
And I can guarantee you, over time, in fact, the SBM was triple. There was Chase Bank and there was Fidelity Bank.
Correct.
So if you look at it, you hear conversations. I'll tell you, keep watch. You may find greater news coming this year towards this kind of strategy. And ultimately, bigger banks or stronger banks also make sure that we can ring fence our own ecosystem of our financial sector from global risks.
All right.
What people don't realize is that Kenya is very connected, and we performed extremely well on currency-wise, on inflation-wise, on interest rate-wise, and we give credit to the governor of the Central Bank of Kenya, Dr. Patrick Njoroge. If we work collectively, stronger banks power the economy. When the economy is powered, you create more jobs. As more jobs come in, you then have solutions to dealing with the youth and employment in our economy, and therefore positioning for ourselves for a large economy in the next 2 to 3 years.
Awesome. And Joshua, as we come to the tail end, what would you tell investors? You are a listed company. What should they expect in 2019 in brief?
So 2019 should be, we see a strong year for a bank, for KCB. I mean, by quarter 3, we're already 19% higher a year on year. And we expect that this last year will end very strong. 18% quarter 3. We don't see any major shocks in the last quarter of the year. Now, the economy is definitely we expect a growth beyond 6% in 2019. Now, we are also we're finding new innovations to address with the problems of the interest rate because that has been a bigger problem for our business. But I also must say that we have to get away from banks always seeing interest rate cap as the only enabler for performance. Yeah, we've spoken about it from 2016. It's now an old story.
Yeah.
Correct? It's an old piece of jacket. We need to find new innovations. We for sure will come back to it. But how do we build the investment on our digital platform? We launched a new Vuma platform last year in September. We've tripled our transactions. We've increased 4 times the number of transactions. We are issuing today 100,000 loans per day. In the past, we were issuing 20,000. That is 5x, correct?
Yeah.
We moved from 2 billion a month to 10 billion a month. That's 5 times. This is one area. We have a fee into it. We expect a stronger performance from our international businesses in this year. We just appointed a new regional director for our international businesses 1st of January called Paul Russo. And we expect in the 6 countries to consolidate our businesses. And finally, we're going to take advantage, now that we are merging in and closing on Imperial conversations, the Imperial Bank transaction will be closed in the month of March. We already have the approval, so we expect to finalize the due diligence, and that gives us a chance to finish the process. So I would say it's an exciting year for us. And despite the difficulties we've seen in our stock market, we expect the bank to have a strong recovery. We're already seeing it in the last 2 weeks of January, in terms of our stock price, in terms of our market sentiments. And I believe that I stand strong for our investors. They should see a better year for KCB in 2019.
Great, great. And just asking for that borrower who is at Imperial Bank, will KCB eventually brand all the branches that are under Imperial Bank?
So a number of the branches for Imperial Bank we are looking at today, as I said earlier, KCB was already present in every single branch where Imperial Bank was operating. But we have specific branches, in Mombasa area. So if I look at Diani, in Ukunda area specific, if I look at Mombasa, Malindi, Watamu, Nairobi, with some, and those areas we're looking at. But largely we'll keep some branches. So what we've done now in terms of Imperial Bank is we've had all the customers, they were largely 22,000 customers. So today, I think we've now been able to reach more than half of those customers today. Some, they had already been paid most of their deposits in the last 2 payments. I think you probably are aware that Diamond Trust and NIC had used it. So, but what we are saying is that for every single customer of Imperial, KCB is prepared to reach them at their point of service, wherever they were, whether it is in Nairobi or Mombasa or Kericho or Kisumu, and they can count on us to give them the service that they expected. We'll also keep some of the staff from Imperial Bank.
Fantastic. I'm afraid we just have to wrap up this interview because we can talk all day long. I really like your passion, your energy, and your in-depth discussion. Many thanks, Joshua Oigara.
Thank you very much, Bobby.
Thank you for
Appreciate it.
hosting us.
Welcome.
Well, we've been speaking there to Joshua Oigara, the Group CEO of KCB, shooting from the hip. He's quite optimistic of the banking industry, indicating that technology will be a definitive aspect in terms of giving financial institutions a competitive edge come the end of 2019. Well, that's where we have to leave it at for now as we make way for market analysis. Well, that's where we bring it to a close on this week's episode of The Trading Bell. It's a wrap from me and the entire team. Have yourselves a lovely weekend ahead.